Hi, everyone. Dave Hunter is here today. Dave H. Contrarian. Dave has some revised targets. I follow David surreptitiously. He's interviewed everywhere. So I kind of have an idea where his drift is going. And I know that a lot of people really love the interviews because, David, welcome back. You're the most bullish bear on the street, meaning that you're more bullish than anyone with upside targets, and you're as bearish as the bearish uh, analysts out there. So, we have a couple of market events that there's lots of opportunity, and you've been right about the melt up, but we have just a little unfinished business from our last interview. So, welcome, buddy.
Yeah,
Welcome
hi
back.
Dale. It's good to see you. Thanks for having me on. Yeah, I'm either the most bullish bear or the most bearish bull. I'm not sure which it
Yeah.
is, but
Well, let's go with what's first, and that's the melt up. But last time you were here, and I remember, we were right around here, and I said, Dave, if we take out 5,600, we're going to 48. Okay,
yeah,
now,
that was a
uh,
great call on your part. I said, yeah, it's possible, but I don't think so. And days later, it was Trump announced
yeah.
his tariffs, and there we went. So it went perfectly to where you said it was going.
So I really am interested in not, a call, but when you saw this occurring down there, Um, how did you keep your people steady and calm? Probably because of the history they have with you of seeing these breaks come back and you not panicking. But did you also look at it as a gift horse, and back up the truck when we were down there?
I did. Yeah, I'm not sure. I calmed. There were certainly some people that I may have calmed, but there were plenty on X that. I mean, I was very busy those days, and my favorite saying was just let it play out because they were all doing what Wall Street was doing, which was taking, the Trump tariff announcements and thinking that was what we were going to get. And I said, he's a negotiator. Just let it play out. And when it got down under 5,000, I think it was somewhere around 4,900. I raised my target from 8,000 or from 7,500 to, I'm trying to think, 7,500 to 8,000, I
Okay.
think. And then I raised it again recently to 8,700. But yeah, well, everybody else on the street, well, virtually every strategist on the street was saying we've topped, the market, the top is in, we're going lower. We might go to
Yeah.
4,000, we might go to 3,000. At that very moment, I turned more bullish because it was clear from the sentiment. We had gotten sentiment back down to levels that was like March of 2020, and we had only dropped. We were down 20%,
Yeah.
obviously, but
Yeah.
nothing like March of 2020 with the pandemic, and yet people were scared to death. So
Yeah, and we had the Zweig breath thrust down here too. I know a lot of people were talking about the how the breath really improved in a short period of time. That was
yep.
kind that had the feeling of this was a climax sell-off. And what an interesting point it held at. See, that was the old high that we had here, Dave.
Yes,
Back,
absolutely.
I
Yep.
mean, so don't tell me charts don't matter.
Right.
Anybody out there?
Yep.
So now I'm interested in the whys of going from 75 to 8 and now to 88. Is it because it's taking longer, or that so many people capitulated here that they're just going to keep getting squeezed into the market? Or is it because finally you might see some relief from interest rates if the 10-year rolls over? What is it about as time goes on, your targets increase?
Sure. Yeah, it's all of the above basically because the biggest thing when we were in early April, that when I went from 7,500 to 8,000, the biggest thing was obviously sentiment. I'm a contrarian, and sentiment matters a lot to me. And like I said, sentiment just the market was so oversold, and sentiment was so negative.
Yeah.
I said, what it's doing is giving us even more buying power. Um, from the October 2022 lows on up, um, basically you had the institutions fighting this thing. They thought it was a bear market rally. It was going to stop before you got to 4,000. It was going to stop at 4,200. It was going to stop at the old highs at 4,800, and
Yeah.
it kept going.
Yeah.
And all they would do is say they raised targets and they got a little more bullish, but they kept saying, I got 1 foot. They kept acting like they had 1 foot out the door, and it was just a matter of time before it rolled over. And then we got the April swoon, and it was for them confirmation that we were rolling over. That the bear market was finally going to go. So the fact that they were skeptical all the way up and then got very negative, it just argued to me that we have more upside than even I thought, and I've obviously been the high on the street by a lot.
Okay.
Um, so so that was that. Fundamentally, yes, I think bonds, interest rates. There's a clear when you look at the bond market, whether you look at the 10-year or the 30-year, there's like a 22-month
Base.
yeah, base in bonds, top in rates. And it argues for exactly what I've been calling for is, a big bull market in bonds and rates going ultimately far below 3% and ultimately in the bust down to zero. But certainly in the next 6 or 8 months, you could see three below 3% for sure.
Is the beginning of this bond market rally people getting ready for what you're looking at maybe next year? They're getting a little defensive here and want to just lock in yields because they won't get the yield if they're in short-term money market
Yeah, I
accounts.
think the economy is clearly slowing down, whether it's part of it is tariffs or not. We A lot of it is Fed policy. Fed is restrictive. They even admit they're restrictive. Their policy is restrictive. They shrunk the balance sheet by a couple $1 trillion, even though we grew it by a lot. In the pandemic period, up to 9 trillion. So it's 2 trillion down to seven. But we've never shrunk the balance sheet by 2 trillion before. Yes, it's 2 trillion after growing at 5 trillion, but that is restriction. And at the same time, they've kept rates way above what the market tells them rates should be. So I think a lot of it will prove to be Fed policy, but some of it may be tariffs. But the point is, we are very close to recession if we're not already in one. And I think that's what the bond market is just beginning to sniff out. They're still caught in the worries about inflation and all of that. But I think we are at a major bottom in bonds, a major top in rates. And we could fool around here for a week or more because rates have come down from 460 to 420. So you could probably be in a trading range between 420 and 440 if it wants to be for another week or a little more. But ultimately, I
Yeah.
think in
Big,
short
it's a
order,
big triangle. We're right in the middle of this
yep,
triangle here.
yep. And in
Yeah.
short order, I think we're going to break below 4% and head towards three.
Yeah, the breakdown would be here. It looks like about 372. What was this? 470, 130.
Yep,
That would
yep.
take it down to, it would measure 240, Dave.
Okay. Yep. Yeah, I've been saying 250. I've been saying, and I tell people I can't predict the path exactly.
Okay.
Ultimately, in the bust, I'm pretty confident in saying a 0% 10-year. But during the so-called melt-up phase before we get to the bust, which could be recessionary period, you could see it down to 2.5,
Yeah.
certainly sub three. So and then from there, whether you correct a little bit before you head lower or whether you just keep going, I don't know.
Yeah. So it's interesting. We're basically going to get two different messages. The market's melting up as the economy slows because it's getting jet fuel from lower rates. So a lot of people don't understand the real economy and the stock market are not the same thing.
Right, exactly. that's what people really scratch their head when I say, I think we may already be in recession. They go, well, then how can you get your melt up? I said, for a period of time, several months still, it's going to look like a soft landing. The narrative will be a soft landing.
Okay.
When it gets troublesome is when they realize, ooh, it's not a soft landing; it's a very hard landing. That's when you roll over.
Okay. All right. I'm only guessing, but I was trying. Well, we were talking about the S&Ps, and you keep going back to this huge move from 22, from this low all the way up to here, which
Yep.
was 30. So that was 2,500 handles about approximately. So if we have a quality from 4,800, that gives you 73. Is that how you had your 73, 74 target for a while? You had a quality of this. And maybe you don't even know that, that's what it was, but you could also have a fib extension of this and do 1.38 to 1.618 could get you to 8,800.
Yeah, I don't use fib, and I don't do what
All right.
in terms of the equal moves,
Eh,
etc. I'm not that good a technician, but it when I look at a lot of my underlying stocks and sectors and things, it just told me there was a lot more upside than I was factoring in initially. So that's why I keep raising. It's I look at a lot of things, and when they all add up together, I get conviction. And they were, I was getting signals from what I call cross markets telling me I wasn't bullish enough.
okay.
It's going to be parabolic in the end, which means we could go from here to 8,700 or higher in a matter of 2, 3, 4 months. Um, and so there's no magic to 8,700. I could be off by 1,000 points. I mean,
Yeah.
that's as comfortable as I can be right now is at 8,700. But
Okay.
that doesn't mean I think I'm going to be able to pinpoint that last because it's going to be a vertical move.
Okay, yeah. You think we could accomplish that before New Year's?
Yes, very
Okay,
definitely. I think we could. Now, obviously, people fault me for they call it kicking the can down the road, raising my targets and not having saying it could happen by this time and then it gets extended. Market's going to tell us when it tops. So I'm not saying I can pinpoint that, but I do think the real potential is there to have this all happen this year and maybe even by fall, sometime
wow.
in the fall. So
Okay, real interesting and uh, great trading opportunities. You were right about leadership too, Dave. You said semiconductors were going to be one of the stars. They outperformed the market. They led the way. They finally took out that low from last year, last August, and they're still outperforming. Any
yeah, there's a
pullback?
little, there's a little, backing filling here because of the tariff
Yeah,
news and people
right.
being, but I don't see anything there to suggest it's not going to continue to lead. The semis aren't going to continue to lead.
Okay. And the last few days, the Russell seems to be beginning to outperform the other averages. This should be the stage if they're ever going to go. It should happen in this stage, don't you
Yeah,
think?
I think you could see new highs in the Russell within the next month or 6 weeks or 8 weeks, somewhere in there, maybe less.
Okay.
And frankly, it's basically been probably waiting on the Fed, waiting on interest rates. It's a very interest sensitive index. And I think it's also signaling that story. The bonds are probably just about ready to move.
Okay. Yeah, because even some of the housing stocks are starting to firm up a little bit. I wouldn't buy them.
Yeah,
But
I
we're
have
in,
I have on the XHB index, I have a target of 160 or one is it, I think it's 160. It's one I've kind of put things in my mind and I forget whether it's 150 or 160, but it's up there.
okay.
And I wasn't sure. I faltered a little bit in the spring because I said I don't know if we're going to have that last surge in housing, but I do think if you get bond rates, mortgage rates down, you're going to have one last bounce in housing. So
Okay.
It's not something that people should think has legs, but I think that's a pretty good move from here.
What in housing to go up and get prices to go up?
Well, not no. In terms of the XHB index, the
Oh yeah,
home
yeah,
builders,
yeah.
the home builders wherever they are now
Right.
could move to
Okay.
150, 160.
Okay. All right. So a lot of different sectors. Of course, the miners finally started acting well for you. Great call on silver and gold, Dave. You want to update people on your Meltup
Yeah,
targets in gold?
I think since we lost last talk, I may have raised gold to 4,000. I was at 3,400.
Yeah.
I
Okay.
did it last, I think, in my second quarter letter in April.
Okay.
So it was just after we talked, I think, or maybe not. I think so. So anyway, 4,000 is my target on gold. Silver, I've had a 75 target, and that remains my target. I'm very bullish on both. Gold has been basically consolidating its gains since April, since the washout in April, and or the spike up in gold, but washout in
And
the stock market.
silver, the gold silver ratio peaked up here at 108. It was telling people it was a simple thing to do. Call your bullion broker and exchange your gold coins for silver, some of them.
Yep.
And that's already down about 20% from where
Yeah,
it
and I
was a
think
month
silver
ago.
looks so good whether you look at a shorter or longer chart. I think silver is in a very bullish pattern.
Okay. I don't know how you trade this, Dave. I think both the
I
bull, the bulls and the bears
got I
had a
got
rough time,
I got
huh?
caught in that one because, well, not caught, but I have, as you know, I've had a $6 target on copper for a long time. It was
Yeah,
down down at $4 not long ago, and
yeah, it was three.
people couldn't believe you're calling for a recession and you're saying $6 copper. Well, we pretty much got there, in the last
Yeah,
month, but then Trump opened his mouth, changed his tariff news, and by the way, when it got, it was approaching six, and I said I may have to raise my target. And I waited and waited, and then I said, yeah, it's almost six, and we haven't finished this move. I raised my target to seven, and then the next week he
yeah,
announced the tariff refining raise, and it went right back down. So
yeah.
people keep saying, are you sticking with your target? I said it's too early to know, but I am at this point. I think there's still a possibility that we turn right back up. This isn't really didn't break anything. Um, and
Just longs and shorts.
yeah, yeah, it broke them.
Just
um,
people who are positioned.
yep, yeah.
Yeah,
So we may get, because of the wildness of this last half of this year or the last 4 months of this year, we may get it actually moving back to above 6 to 7, or we may not. Six may have been it, and that's fine.
yeah. All bull
um,
markets are roofed in copper.
Yeah, well, yeah, for
Remember that
sure.
one?
That's why I'm sticking to my seven right now, or not with conviction, but I'm sticking to it because if I'm right that you're going to get a bounce in housing and home builders, that means some activity is going to pick up there. Obviously you're going to probably see some pickup in autos. I don't know how much copper plays a role in that, but
Yeah.
there's you are going to see economically sensitive things get a boost here. So I think copper. And by the way, the copper producers didn't get bearish in this move. Copper
No,
producers filled
I
in a gap
noticed.
where they should have.
Yeah,
Copper, COPX. I have a 75 target on that. And I'm much more confident about that than I am whether copper goes to seven or not.
yeah,
COPX came back down into the mid 40s, mid to low 40s, filled in a gap, and turned within a day or two of that. So I think COPX can go to 75
okay. Because I
from mid
noticed,
40.
yeah, Freeport wasn't really badly damaged by that
Nope,
sell-off.
nope.
You are you telling people giving them direction in uranium, or that's too
No, but
esoteric?
I've chosen this cycle to stay away from uranium, not because I don't think it can move up. I just didn't see it in this cycle as anything I could really read.
Okay,
I think obviously the long term story is good. Nuclear is coming back. Obviously, military wise, it's not going
Yeah.
away. So I think next cycle uranium probably plays with all the commodities, but I just chose to sit it out this time.
Okay. I think this is important to address. We've had a little dollar bounce. Are you considering this just a bear market rally? I think the bear market rally is not over, that we could get back to 102.
Yeah,
Um,
I
what do
guess
you
we
think?
could. I believe we had our bear market rally. I think when it got up over 100 and everybody was calling for much higher, um, it rolled right after that, and
You mean here?
I think that was it. It just got
Okay.
you had everybody on one side of the boat,
It's
and it
still a
needed.
pretty crowded trade
It is still crowded, but
on the bearish side of the dollar. It's still
it is
pretty
still crowded.
crowded.
But I think the fundamentals really are going to overwhelm the fact that it's oversold.
Okay.
So I think the next stop is 90. And then
Okay.
from there, I have an 82 target.
Okay. So here's how you get 82. Because I think about your objectives and then I look at my counts and I go, And I know you don't use these, Dave,
No,
but it's based upon this big picture. So here, so we broke 14 from here. These were the tariffs, right? We peaked at 110, went to 96. That's 1,400 points. So if we get up to 102, 103, 1.618 of 14 points is 22, 23. So if we get to 103, 1.618 of this move will take it exactly to your target at 82.
really, huh? That's
Anyway,
amazing.
so I love when different methodologies can point towards the same number and target. It
Yep.
gives me more conviction about it.
Yeah, mine's much more. I mean, as you know, currencies are a very technically driven area, so I don't argue with any of that. I basically fundamentals get me there combined with technicals, but my technicals are more. There's a trend line down around there that I thought it could go to, and the
Okay.
fundamentals support a big drop in the dollar. So
Yeah, they certainly do. So, that's why I'm thinking uh, you know, it's going to be a great short up there. And maybe the metal's correct if the dollar rallies to 102. They seem to be reattaching themselves towards a weaker dollar is better for
yeah,
strong gold, and a strong dollar is a depressant on
yeah.
gold.
Other than very minor, like I wouldn't be surprised if um, silver pulls back a little. I'm looking at some of the miners and pulls back intraday.
Yeah,
In the next day or two, a
yeah,
little bit, but not a lot. It gets it back to where it was just a few days ago. So that tells me
yeah.
maybe silver could sell off a little bit, but I don't think it's more than a day, two or three, and I'm not sure you're going to get that. So that's why a lot of other things tell me I don't know that the dollar's going to rally. It could,
Yeah.
um, and gold looks great. I mean, gold to me, silver does too, but gold. Look at a monthly on gold, and it's coming out of a and look at it there. I mean, it's
Yeah.
just a nice consolidation before you move
How
higher.
how do you know it's not distribution?
Well, fundamentals don't support that. Number one, number two. I mean, I don't think gold's anywhere close to being
There
distributed.
are no bears.
Doesn't matter. There's look at the holdings. Institutions don't own it. I mean, it's still a small holding in some institutions and not a lot.
Okay.
The retail likes it, but institutions have still not gotten really on board.
Aren't central banks institutions?
Well, I'm talking about institutional investors.
Oh, okay.
Certainly
They're not,
central banks have
they're
bought
still
it.
not they're still not in, huh?
And the central, no, not even close. The central banks are going to continue to be wanting to own it, given what's coming. So, I I don't. There's not, and this is probably dangerous to say, but there's not a doubt in my mind that that's consolidation for a higher, not a
Not
distribution
distribution.
pattern.
Okay. All right. Why don't we come off the markets and talk a little bit about Powell? And I know that, through our interviews, you've been, pretty pro Powell. He stayed tight too long once before, you thought. And you said, you had confidence in him. Do you think he should finish out his term? A lot of
Well,
people are weighing in on this.
yeah, no, I'd correct you on that. What I think what mixes people up is I go against all the silliness on X where people are slamming power. I have one particular follower that hates him, and I go, I think he's late, very late. I think the Fed is doing what they always do, which is, and that's why it's part of my forecast is that um, because they're, that what's going to trigger the bust is Powell and the
Being behind
FOMC
the
being
curve.
late. So I've been
Yeah.
very critical of what he's doing. What I what I push back on is the idea that he's out there by himself. I go, all of Wall Street agrees with him. Most of Wall Street is saying the same thing. There's no reason to cut rates, and most of most of the FOMC agrees with him. So this idea that we single out Powell, and I said he's more right than I've been in the last year in terms of thinking they should be lowering rates. That frankly, you look and the economy's held together better than most people were saying. So Powell's been
Yeah.
basically right if you look backwards.
And then when
But
he,
I
and,
have but I've
go ahead.
consistently said if you look forwards, I think he's wrong. So
Okay.
I'm not supportive of his policy. I hate when people get very personal about a guy that because my real pushback is on most retail investors have bought into all the hysteria out there. They know nothing about monetary policy. So my pushback is on they're doing it out of ignorance.
Okay. All right. So Paul will be late again, so they're going to hang this recession and bust on Paul. That's going to be his legacy, isn't it?
Well, certainly, I've seen that argument made that part of what because I've said Trump just doesn't understand the Fed, and I've said this as you know over and over on X, is that the Fed doesn't control rates, the bond market does. You and I agree on that, right?
Yeah. Yeah. The
Bond
vigil.
vigilantes or whatever
Yeah.
you want to call them, the bond
Yeah.
market controls rates. So he can control the overnight rate. That's it.
Yeah.
Obviously, the Fed when they ease, bond market will respond to that. But the bond market usually leads, and then the Fed follows. So I've been saying, Trump just doesn't understand that it doesn't matter whether the Fed eases or not, here cuts rates or not, rates are coming down, and that he just doesn't understand that. Other people, as you know, are out there saying he's kind of setting Powell up to be the fall guy. If the economy weakens, he can say it wasn't me, it was Powell, and maybe he's smart enough that he is doing that. I don't know, but
Yeah.
I think there's a lot of people out there, including people on Wall Street, who still think the Fed's important for whether rates go up or down. And I step back and go, the bond market's what determines rates.
Well,
Now,
all you have to do, Dave, is point their attention to what happened the last time they eased, and the bond market didn't like it and took rates up.
right, right. Yeah, and
Okay, so
that was unusual, but you're right, exactly. That shows you who's in charge.
that's a great example of who really runs the show there.
Yep.
Um, I also want to bring up tariffs. Are tariffs going to be part of the problem? Because in the 30s, Smoot-Hawley, we had 5% tariffs, went to 20. At that time, global trade was 9% of GDP for the US. I don't know what it is now, but we've had a similar rise, 2 to 17 or so. It's not a pro-growth policy. Is this going to be a contributor to the bust like it was 90 years ago?
I don't think it's at all comparable to Smoot Hawley. What I will say is, and I agree with what Trump is doing. I think he's trying to, and he only has one term. If he even has that, he may only have 2 years. He's trying to reverse 40 years of very bad policy. Right. This started back in the early '80s. We gave away our manufacturing base. We basically handed a gift to Wall Street and said, and to corporations and said, doesn't matter where you manufacture, your earnings are here. You can go wherever you can do it cheapest. And we didn't stop that, and we watched our cities decay. We watched Middle America turn into drug capitals because people were so depressed that they because of their loss of income. We really gutted our industrial America, and he's trying to reverse that in a very short order. And I wish people would step back and realize how dramatically things are reversing. Nobody could have ever predicted this could happen this fast. What he did with the EU, what he's done with, some of the areas. Now there's going to be fallout. There's going to be. I would guess it's going to play a role in the bust. It's going to play a role in slowing this economy. And if so far he's been right that we haven't seen big price increases, and I continue to say we're heading for deflation, not inflation. But you could have an uptick, in the short run. I think basically, I don't think tariffs are the big story of the bust. I think monetary policy is a big part of that. Keep in mind it's a global bust, so I think a lot of the problems are overseas, and maybe some of that, more not so much U.S. economic hit from tariffs, but maybe some of his what he's doing is going to hit the global economy. Some of our trading partners hard, and it is a global bust, so it's going to spill over into here and
Yeah,
everywhere.
global trade,
Yep.
big deal. Uh, Dave, anything else you want to cover that I didn't touch on?
Yeah, let me think. Obviously oil is a kind of a sideshow these days, but
Right.
I will say I've been very right on oil, and I think I when it got down to 55, my target was 60. When it got down to 55, I said you'd probably be in a trading range, and I said it before it turned. I said you'd probably be in a trading range between the mid 50s and the high 60s, before you roll over in the bust and go to 30. Obviously, with Iran, you had it bounce above 70,
Yeah.
very short
But
term, but
I
it
bought
still
it
looked for.
here. I predicted the hit on Iran.
Did you?
That was
Yeah.
my yeah. So
Yep.
I knew that was a question of when,
Yep.
not if. So
And obviously it came right back into
yeah,
the range, and I think that's what we're looking at is mid to low
40s
50s and high
and
60s as kind of a range. So
okay,
it's not going to play a big role in the melt up. I would continue to say oil stocks are going to underperform. And then in the bust, I think oil gets hit pretty hard, as with it, but so does everything else. So it's going to basically trade down with the market,
okay.
um, and so that's there. I think that's pretty much it. I mean I can't emphasize enough. Looking forward over the next 3, 4, 5 months, you've got all systems go for bonds. Again, like I said, doesn't mean in the next week, but all systems go for bonds, all systems go for stocks, all systems go for metals. And I think people are going to be amazed at how at least for a few months it looks like everything is glorious, and then it comes to an end.
So if I had the theme song "Blowing Bubbles," I'd play it right now. So, but ride the bubble.
Right. Yeah.
You
Well, yeah, like I say, everybody
we'll
has to
see
make
it.
their own decision on how fast they can react to things. But the biggest thing I'd leave people with is just don't get caught up in the euphoria, because that's what's coming, I think, is those institutions that have fought this thing all the way up are going to all of a sudden tell you this thing has legs and it's going to run through 26 and 27, and you know and that
Plenty
there's
of
reason to be all in.
euphoria building up in crypto with
Yeah, there is.
having a presidential sponsor of it.
Yeah, it's I'm out of that realm for sure. I
I
miss
know.
it, or I
Well,
don't,
the
but
president likes it.
he
In
sure does.
in fact, I'd say that Fartcoin is a pretty good representation of. There's a lot of money that doesn't know what the heck to do with it, It's
Yep.
got over a billion market cap.
Yeah, they're obviously there are sponsors of crypto out
Oh,
there. I'm just
how about
it's
the stable coins, Dave? Is it, there are people, I don't understand it.
I don't
It, so, I mean, maybe that's
I
going to be play a role in what's happening with the
yeah,
dollar.
maybe I'm missing it. Maybe that heads off the bust or something. I don't
Yeah,
think
I
so
don't
though.
know.
I think it's wishful thinking to think we're coming up with these things that I still call them gimmicks. It may not be a gimmick, but I just don't think it's big enough to over. As I say, macro trumps Trump, and
That's
I
okay.
just
I
think the
like that.
macro where we are is just too big to for any of these things to matter.
Okay.
And
So what?
it'd be one thing if the bust was the end of the decade. The bust, I think, is imminent. It's next year. I don't think he has the room to be able to do anything big enough to offset what I think is coming. And again, I keep reminding people this is a global bust. It's not a U.S. bust.
There's no one to pull us out of it like China pulled us out of the Great Recession. Now
China's gonna
they're going
China's
to
gonna be
drag
part of the
us down.
problem.
Yeah, they're going to help drag everyone down.
And so is Japan. That's the other one I
Uh,
should have touched on. But
okay.
we are seeing the beginnings of rates moving up there and being pushed up. We've long worried about their zero interest rate policy and how it ultimately would fail. We're at that fail point in the next 6 months, I think. So, not right here. They can still kind of hold it together to some extent, but the pressure is building and building. I think Japan's going to play a role in the bust.
I read a great article, Dave. I want your impression as a market historian that basically Japan had their bust in '89 and it took them 30 years to come out of it, yield curve control, etc. And that we are going to enter our own Japan phase coming up here, that we could
I,
be just
I,
like
I've,
Japan.
I've said that before, and
Have
I
you?
will tell you, I was at Fidelity in the late '80s, and I was making the case that Japan was topping. I was a year early because we had the '87 crash, and
Right.
in 1988, I'm going. Everybody's worried about the U.S. What they should be worrying about is Japan.
Yeah.
And at that time, there was a big name money manager who was hot as could be because for several years he was right on Japan, and he was still bullish, and I was very bearish. We were in the same. I was in Fidelity International. He was in Fidelity, but and it peaked a year later and never looked back. And
Yeah.
I think that's exactly right. I think the highs of this bull market that we see, I think this year, I have said many times in the US will not be revisited for decades.
So people are going to learn the difference between bottoms that are V's and bottoms that are L's.
Yeah, although the bottom, keep in mind, if I'm right about how much money is going to be printed in the bust, the bottom in let's say the bottom is sometime in the second half of next year. Um, if let's say we top out in the fourth quarter and the bottom is, fourth quarter next year, could be third quarter, fourth quarter next year. If we're looking at an 80% bear market, which is my call, um, you can go up from that 80%. So let's say the S&P goes from, 9,000 to 1,800 would be an 80% decline, just using round numbers. If it goes from 1,800, it can go back to
Six.
6,000 or 7,000 and still be thousands of points away from the previous highs.
Right,
So
right.
I think you're going to have a double or tripling out of the bottom, maybe more, but it's not going to go back anywhere near this year's highs. And this is a secular bull market peak that started in 1982. It will be years before we get into another secular bull market. We'll be in a secular bear, which means lower highs, lower lows, as you know,
Yeah.
for many years.
And I think Nick Leeson took down Bearings, being bullish the Nikkei, buying it from the peak, and he took
Yeah,
down
yep,
Bearings Bank.
yep,
Wasn't that it?
yep. I think so. Yeah, there were a lot of people that get caught at the end. They believe it can go on forever, and That's the
It,
warning here. We're in the last stage. It's going to be an exciting
you
stage
know how many?
as it was in 1989. I mean,
Yeah.
Japan coming out of 87, um, more, I think it doubled
Wow.
coming out of 87 and peaked in 89 close to 4,000. And, never saw that again.
An eye-opening discussion with my friend, my trading warrior brother, David Hunter. You should follow David. Check out his newsletter for something that most people don't see in their lifetime. That we have some good health for the next 5 years. We're going to see some market history that not every generation gets to experience, and let alone trade it.
Yep.
So, you know, this could either set you up or take you down. So be prepared, know how to manage risk, and follow smart people like David Hunter. That's my advice. Dave, you still there?
Yeah, I'm still here.
All
Thanks.
right, all right.
Thanks,
So
Dale.
yeah, so
As
go ahead.
always, thanks for having me on. As always, a fun discussion and enjoy your time at the beach.
All right, thank you, Dave. Enough pearls in this interview to string a necklace for June Cleaver, who most people won't even know who it
Yeah,
is.
Beaver's mom.
Yeah, there you go. Thanks, Dave. It was great,
Okay.
great
Great
batting
to
the
see
ball
you.
around. All right,
Thanks, Dale.
adios. See
You
ya.
too.
All
Bye.
right, everyone. It'll be record. It's recorded. You can watch it later as well. See you, everyone.